This is Business I Am. My name is Elijah Charles Kianya. Welcome back. Now, social distancing, lockdowns, and other restrictions unleashed by the COVID-19 crisis have driven people to switch to online modes to buy essentials and other necessities. As people shop from the safety of their homes to protect against the virus, financial institutions are experiencing an explosion in digital payments. While the institutions have so far ensured the availability of digital modes of payment without any major disruptions, it is impossible to predict how the crisis will play out as we adapt to the new normal. Now, to take us through the effects of the pandemic on digital payments platforms and how we can ensure seamless payment services during the crisis, we're joined by Thomas Murai, the Assistant Manager, Digital Financial Services at Microsoft Consulting. Mr. Murai, good morning, sir.
Good morning, Charles. Thank you for hosting me today. It's a pleasure.
Happy to have you around. Let's get into it. Can we start by really getting an overview of what the coronavirus pandemic has really done to digital payments within the economy? And could we get where we were before the pandemic so that that picture is quite clear then?
Okay, thank you very much. So the pandemic has had devastating effects on the economy.
Yes.
But this has had, on the flip side, in the financial services, this has been a boost in terms of digital payments as more and more people shift to digital payments. From a research that MSc Consulting did last year during the pandemic, around July, just 3 months into the pandemic, we saw an increase of about 38% in terms of those who adopted digital payments for the first time. So this shows the extent to which users are shifting towards digital payments. And the effect of this was basically understood by lockdowns, which meant that there was restricted movements. According to a research done by FSD, which is also an organization that deals with consulting for digital services, about 35% of people moved towards the digital payments, especially for ordering food and other essentials. So that really shows the extent to which majority of the population in Kenya, especially, shifted towards digital payments. As you know, last year the CBK announced a raft of measures for financial institutions, basically to enable customers basically to shift to digital. One of them was the reduction in charges, the zero rating fees on transactions below 1,000 shillings. So those are some of the things that have enabled the push towards digital payments. And from the financial services point of view, I think the pandemic has shifted the tide towards digital payments, and we do not see as if that will be rolled back. I see as if more and more people will be able to use digital payments.
So, yes. Mr. Murai, let's talk about where we were before the COVID-19 pandemic. Would you say that, well, there was this move towards digital payments within the economy, which was further emphasized by the coronavirus pandemic, or we were not really stressing so much on digital payments within the economy?
Okay, thank you. So right from the year 2007, when Safaricom launched M-Pesa, which is the first digital payment platform, right from then we started seeing the shift towards digital payments. So you'd see use cases around digital payments. You'd see government-to-person payments being done digitally. You'd see person-to-government payments being done digitally. And one of them, of course, is the KRA, which really adopted digital payments using iTax. So we've seen quite a number of use cases which grew from the year 2007 to around last year, 2020, basically built on the model of from the model of M-Pesa. So M-Pesa came in, Airtel Money, GCash, and other products which enabled the customers in Kenya to be able to transact digitally. But now, what really made the tide to shift further and to increase the uptake was the pandemic. So as much as we had a good uptake, especially in Kenya. We're leading in terms of mobile payments and digital financial services and other among East African countries. But what really increased the tide was the pandemic, and we would see policies which were put in place basically to push people towards digital payments. For the first time, you would get into a public transport vehicle and they'll tell you pay by M-Pesa or pay by mobile instead of paying by cash. So these were some of the things that really we saw a shift in the tide. As much as we were far much ahead in terms of digital payments, but this the period of between April and now currently during the pandemic zone, you have seen a real shift in terms of digital payments, and you have seen from both a policy perspective and also from a demand perspective that people now fear handling cash, and more and more people prefer transacting digitally. And a complementary research we did around April last year, just 1 month into the pandemic in Kenya, we noticed that the cash in, cash out agents, basically M-Pesa agents, your bank agents in the estates and all that, they reported that there was a significant decline in terms of people who are cashing out. So you normally receive money, then, so what people normally do is once you're paid, let's say for employed workers like you and me, at the end of the month, you'd go and cash out, get your money, then transact in cash. But what most people did was during the pandemic, there was a shift in terms of people would go into their phones, pull money from their account, maybe to their mobile money, and transact digitally, pay rent using digital platforms, pay for your supplies using digital platforms. And this has seen growth in companies like Glovo. According to FSD, almost 50% of the transactions on Glovo shifted to digital. So mostly card payments or payments by mobile. So this is now what it was before and after.
So Murai, let's talk about the different types of the digital payments. How has the digital finance boosted the various cost segments of digital payments? And when it comes to the Kenyan economy, would you say that if you're going to talk about digital payments, then you have to realign yourself towards mobile payments platforms? That is the only way you're going to penetrate the Kenyan economy.
Okay, thank you. So there are several segments, major segments in terms of digital payments.
Yes.
So one and the most popular, mobile payments. So mobile payments, one of the most popular payments platforms that we have in Kenya, and also in Sub-Saharan Africa. So this has been brought about by the widespread ownership of mobile phones. So with the introduction of mobile phones in early 2000s, and the introduction of M-Pesa and other financial products domiciled on the phone. So most people are now transacting digitally with phones. First, because of convenience, from the comfort of your home, you can transact digitally. And then because of the speed, so you don't have to visit somewhere to an agent or maybe a bank branch to be able to transact. So basically, the benefits are what has created the demand for mobile payments. And as I mentioned, the push by some government agencies basically to transact digitally. Today you go to, let's say, NSSF, they'll tell you you can pay for this and this using a mobile phone. NHIF, you can contribute using your mobile phone. The biggest, maybe the biggest collector of revenue, KRA, will tell you that pay your taxes digitally. So, and down there, once you generate your payment slip, they'll tell you this is the pay bill number, and this is your account number. So this is what now has the ownership, the large ownership of mobile phones is what has created the demand for mobile as the leading in terms of digital payments.
Yes.
According to a research by GSMA, I think ownership of mobile phones in Kenya is almost 96%. So that shows you that there's widespread ownership, which has now created use cases for use of mobile phones. So all these solutions are based on mobile technology. The second one is card payments. So we have a lot of solutions that are currently used carried out using the cards. So today you can order something on, let's say, Jumia and pay using your card. You can order something on Amazon and pay using your card. You can pay your Netflix using your card. So card payments has also been one of the major platforms who have transacted digitally. And the Visa and MasterCard, American Express, some of the major card solution providers are currently trying to fight for their space, the mobile network operators, because now previously you'd only have your Visa ATM or your MasterCard ATM
Yes.
to transact, but now they're seeing a shift from now people transacting using their ATMs to now mobile. So now that is what has created the shift, and they're now rethinking of how they can partner even with MNOs to be able to push their products. The third one, the third major one is the web-based platforms. So today you can transact on internet banking, can send as much as $1 million in 10 seconds without any documentation. So those are, the internet has opened up the platform so that now customers can transact in the offices. Previously, accountants used to walk around with the RTGS forms, going to the bank to queue for 8 hours to pay maybe for utilities. My background is an account, so previously we used to queue in the bank for 2 hours just to go and pay rent, electricity, and certain things for the companies. But now, these days with RTGS, from the comfort of your desk in the office, you can generate a payment, and it's authorized fully online without having to move papers around. So those are the three major platforms that the major, yeah.
Yes, so let's really therefore assess the impact of COVID-19 on these digital payments, especially when it comes to the banking industry within the economy. I mean, there has been a conversation. How can also banks be part of this conversation? Where are they right now? And how can they be part of this while also ensuring round-the-clock availability when it comes to these digital payments?
Thank you. Yeah. So for banks, one of the major things and the first and priority issues is investment in infrastructure.
Yes.
So as the tide towards digital, banks are finding it less and less necessary to have brick and mortar branches, and a shift towards digital platforms. So you'd see some of the banks are now cutting down in terms of the investment in brick and mortar branches, and creating platforms that can accommodate as much as they can in terms of the digital platforms. And investment in this kind of infrastructure, as much as brick and mortar is expensive, it is also expensive to develop a platform from scratch that will incorporate all these components and yet guarantee security of your customers' data and the money. So infrastructure in terms of the IT infrastructure for developing a core banking system that can accommodate digital payments is one of the areas that banks are now currently very concerned. And if you can look at some examples in Kenya, like HF, before they introduced HF, they had to basically overhaul the core banking system.
Yes.
So that it can accommodate the digital platform and as well as ensure security. I think security is also one of the major aspects. Today, CBK requires all licensed banks to do penetration testing. So those are things that come at a cost because security is paramount for a bank. And if you bank, you and I bank in any bank, and then you hear that it has been hit, you probably the first thing you go and do is pull out your money, and this will cause a bank run. So these are some of the security is one of the issues under infrastructure that is one of the core components. And recently it was in the public domain, students from one of the universities appearing in court saying that they managed to find a loophole in one of the bank systems. So these are serious issues that are causing sleepless nights in boards and the senior management. So that now, as they develop the infrastructure to accommodate mobile payments and all these innovative products,
yes,
how is the security of the systems? So that is the first thing. And then partnerships. sorry. So partnerships are also key. So as we mentioned before, mobile network operators are coming out strongly, and they have a very big customer base. So today, previously you had to walk into a bank to open an account, but these days with your phone, you can be able to transact. There are some people who basically transact only on M-Pesa. They don't have a bank account. Probably
Yes.
if they want to save, they maybe use KCB M-Pesa, a product that is fully under the control of an MNO. So these are some of the aspects that banks are currently trying to consider. So how do we partner with mobile network operators like Safaricom, Airtel, Telecom, basically to tap into their customer base and also to tap into the innovative products that they have, so that now when you could provide a product, it can be available on Safaricom platform, Airtel platform, or Telecom platform. So these partnerships are key as moving forward, so that banks are not left behind. Because conversations currently are happening at the green building in restaurants. So that is where the customer base is. So banks are currently scratching their heads to see how can we partner with this green partner, so that now we can increase our customer base or any other mobile network operators. So those are the conversations that are currently happening. Then I think also the third aspect will be innovative, having innovative teams. If you look at the segment, the population of Kenya, a huge percentage is young people. Basically, people who are 18 to 30, maybe 30 to 45. So these are guys who want products that resonate with their needs.
Yes.
Things that to do with fashion. So how do banks adopt their products so they can meet the needs of this young population that we have in Kenya? So those are some of the aspects that can be considered in terms of having a young innovative team that can create products that will appeal to the large segment of the young people. If I'm not all that old enough, but for those who have found Postbank, you'd go with that book to go to the branch. But these days there are products like the CBA Loop, NCBA Loop, that you might never even visit a branch, maybe just once to collect your card or something. So there are products that now are appealing to the young people, because they have less time and they want to the very minimal contact with the bank. So those are some of the aspects that probably banks can consider.
Yes.
And lastly is probably creating awareness in terms of their products. So a lot of investment is going into advertising campaigns, basically to create that awareness that we have this product and communicating the need that this product is meeting. So you'd see products, maybe financial products, like I think Stanbic Bank launched a product for women, saying that now this is a data account that basically appeals to women, and the advertising will have a lady carrying a handbag, something, working class lady carrying a handbag. Because now there's this segment of empowered women who have financial means to transact. Now, how do we reach this segment? Previously, probably the man was the one working, and in our father's generations, probably the man was the one, the provider. He was the one who was earning a salary, probably a civil servant. So the dynamics are changing, and women are more empowered. So banks are now creating awareness to show that we have products that are designed for women. Even insurance products that probably target the handbag, that you can cover your handbag. So those are things that now creating awareness that show that we have these products that meet this kind of need.
Yes. Mr. Mumai, well, just to clear that conversation on the banks within the economy, on where they stand digitally, would you say that up to now, as we start 2021, they're still trying to play catch up, or they're already there, in your view?
In my view, the banks are still trying to play catch up.
Yes.
Because they were caught napping when some of the products like M-Pesa were launched. So what used to happen before was banks operating in silos because of course, because of the competition. So banks would basically come up with a strategy in order to attract customers better than the other bank. So it was basically a competition for numbers of customers and also at competition for their products to move. But as they were doing that, this provider came up and captured the market through, first of all, low-cost products and convenience. So as banks were closing at 2 p.m. and opening at 9 a.m., these providers came up with products that probably would enable you to send money even at midnight. So these are things that banks, these are things that cause the banks to fall behind. And currently they are almost there, but not yet. And you can see some of the products that banks are currently launching, like PesaLink, which is basically a collaboration of the banks under the umbrella body, Kenya Bankers Association, trying to basically tell customers that you can transact digitally across any platform. So you can transact from one bank to another across through your mobile phone and such kind of thing. So those are things that now banks are trying to now react now to this the shift in competition, because now mobile network operators are capturing most of their segment, their target customer segments.
Finally, Mr. Murai, on a general outlook in 2 minutes, if you may, there's this focus, therefore, to make sure that the economy is migrating to digital payments and the digital economy that we're talking about. In your view, what needs to be done so we don't even talk about banks trying to catch up in a 2021 at a time when we should be there?
Yes. So first of all is enabling policies. So the regulatory bodies have a huge part to play in this. So you have the likes of Central Bank of Kenya, you have the likes of Communications Authority. These are basically organizations that create policies for the players in the industry to operate. So CBK, to some extent, is a bit rigid. So, but in creating enabling policies, it will create a fair platform for providers to compete fairly while securing customers' interest. So enabling policy is one of the key areas. And we have seen things like the Data Protection Act that have been, I think the Data Protection Act of 2019 that came in just to secure, to create a policy in terms of security of customers' data. So these are things that now, as we move along, the policy is also catching up slower than the technology. So the technology is moving very fast, and we are trying to play catch up in terms of the technology. Then the second aspect is investment in infrastructure. So for banks and all other financial service providers, including the MNOs like Safaricom, there needs to be some considerable investments. Now we have the county government, we have the national government. So the functions that are devolved, there's the functions that are under the national government. So there needs to be infrastructure. For a bank to open a branch, there needs to be electricity, there needs to be good roads. So these are some of the things that, if from a government policy perspective, these are aspects that can be taken care of at that level. So that's now create that enabling environment for a bank, let's say, to open a branch, let's say, in a remote area in Karatina or in Kakamega. So these are aspects that maybe we may need to engage at the policy level in order to create that enabling environment. Then the third one is innovation. So there needs to be innovation in terms of what products that we launch that meet the needs of the customers. So those are the aspects that I mentioned.
Mr. Murai, thank you very much for taking your time this morning to speak to us here on a Metropol television. You've been quite invaluable in this discussion. All right, on that note, we take a short break. Once we come back, your economic review.